Most traders will scroll past Merck and Inc. today. The overnight scan didn't, it flagged long. Stick around. The full trade plan drops at the end. Take 1 second, like subscribe, share, done, good. Here's what the scan found. Structure today, patterns first, indicators second, institutional read third, and the trade plan closes it out. Let's start with the chart. On to the chart. 60 daily bars and one story. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $141. Red is our SL at $125. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily. Double bottom, in V head and shoulders, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Real quick, daily scans, posted results, 0 cost. Join in. Then let's dig into the pattern. Pattern number 1. This is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. 112.56. Measured move target, 132.60. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is Mueller 3.1%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2. This is the in V head and shoulders. It's a bullish formation with 3 out of 3 strength. Head 111.57. Shoulders 116.85. Neckline 126.43. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 9.9%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3. This is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plus 5.1%, then tight consolidation. Bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 5.1%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Support and resistance next, because a signal without levels is just an opinion. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.30. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 18, and that tells us we're in a weak trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Quick gear change. The chart told us what retail sees. Now let's find out what smart money is actually doing. Order blocks, fair value gaps. The institutional read. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bullish zone between $130.45 and $132.53. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between 123.66 and 124 warrants. Price tends to revisit these imbalances. Most importantly, we just had a BOS bullish move at 130.74, a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control. The most traded price is at 82.17. The value area runs from 74.94 on the low side to 116.03 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 128.58 is above value area high, 116.03. Trading above VAH indicates bullish strength. POC at 82.17 is key magnet support. Order flow time. Net pressure from the last stretch of candles, buyers versus sellers. Over the recent window, buying pressure accounts for 40% of volume versus 60% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 61, signal neutral. Williams percent R is at 59, neutral. Chaikin Money Flow reads 0.15, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Context check. What's the overall market doing? On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR percent. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Quick marker. The payoff is a minute out. If you've made it this far, you'll want tomorrow's scan too. 1 tap. Here's the unsexy slide that keeps you in the game. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. All right, you've seen the evidence. Here's the trade. Bias is long. We'd look to enter near $129. Take profit sits at $141. Stop loss at $125. That puts us at 3.89 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 3.89. Horizon is roughly 5D. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. That's the play. Like if it helped, subscribe if you want tomorrow's. See you at the next scan. So zoom out for a second. What we just walked through on MRK, that's a long bias setup projecting roughly 9.9% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Drop a comment with the ticker you want next. I read every one. Trade safe. See you tomorrow. The next scan is already scheduled. Tomorrow morning, whole market, one winner, full breakdown. Stock or crypto, whatever ranks highest. Subscribe and hit the bell so it lands in your feed. See you then.